right, so welcome to Game Plan Sunday. Today is October 3rd, 2021. Here with the crew tonight, taking a look at what occurred over the past week in the markets. I had a couple of different interesting things that we'll take a look at here. Well, let's first start off here with the indexes and the sectors here. You guys can see right here on the screen, you know, how the markets performed last week. And we saw Bitcoin had a nice little rally in there. So for those diamond hand players out there, know they were happy. 12.70% leading the way. Oil came in at 2.42%. Oil is getting crazy high right now. So oil came in pretty good. The dollar was up, so 0.85%. That dollar strength, pain on the equities market. So you guys can see that as well. Gold was up slightly, 0.61%. No big deal, but I think we still have some more room up. The rut was, pretty much flat. It was negative 0.29%. The Dow Jones is down negative 1.36%. S&P 500 negative 2.21%. NASDAQ, biggest loser of the week, negative 3.20%. And taking a look at the sectors there, we had energy up 5.78%. I think it's like 2 weeks in a row it's been up. But again, you see that oil up there. Energy is going crazy high. We got financials, and everything was down for the most part. You guys can see financials down negative 0.18%. Materials negative 0.86%. Communications negative 1.20%. Industrials negative 1.66%. Utilities negative 1.93%. Real estate negative 2.13%. Consumer discretionary negative 2.22%. Consumer staples negative 2.27%. And technology negative 3.28%. Healthcare negative 3.52%. All right, so the bears head came out to play last week. So it was a lot of pain in the markets. I know a lot of people was like, man, I got to get back in the game to get this money. And I'm just telling all you rookies that you didn't miss nothing, As my man Jonathan, he's not here right now, but Jonathan always says, this is a September to remember. So September is already in the books, and it was a September to remember. It was very volatile. A lot of, choppy. You get in at the wrong time, get your head chopped off. I mean, that's pretty much what September was looking like. And then we concluded the month, with the bears eating off the plate. Question is, do we go into October with that same momentum, with that same energy that we did last month? There's a lot that's waiting on the plate here. So we can actually talk about some of those things. Actually, let me see here what we got on the headlines here. And I'll just go down some of this here. We did get some economic data. Let me actually just take a look here at the PCE number. This is the inflation right here, the PCE data. And you guys can see right here, there was an increase in the personal income, 0.2%, very small there. Disposable personal income, current dollars, 0.1. The personal consumer expenditures, PCE, current dollars, 0.8. And again, this is basically, people's income, how much you bought home gross, how much you bought home after taxes. That's what all of that is. The index is actually right here. Let me show you guys this. All right, PCE right here, it was 0.4, and the price index is up 4.3. So this is what they talk about when they talk about inflation. So we either use, well, not we, but they use CPI or they use the PCE, and so this is measurements of inflation. And so this is the number that we're looking at. So basically, inflation is up 4.3 on the PCE, right? The Fed's got this 2% target, but we're definitely well above that. They've been lying this whole time talking about there was no inflation up front. Then they came in and said, well, now the inflation's here. Well, it's going to be transitory. Now, transitory, there's no end in sight right now, okay? Everything is just, out of this world right now. So anyway, we're seeing, people spending and, people, getting money. And so basically you see people get money, incomes go up, people will spend more. That's just kind of the psychology behind reading this metric here. And then when you see that start to slow down, then, the economy should slow down, right? People not making as much money. So you start to see those things slow down. You can see, we came off of the month of July. Okay. Income was at 1.1, and then it fell to 0.2. So you can see the slowdown, right? Contracting here. So all of that was important. But again, everything is inflationary, as we talked about before. And on the big news here, we had the manufacturing PMI numbers that came out, which was 61.1%. It was pretty big. I think what I want to do is go over Fior's information here. I just want to read this here real quick to you guys. This is what was said here. Business Survey Committee panelists reported that their companies and suppliers continue to deal with an unprecedented number of hurdles to increasing demand. So they're just telling you, demand is going up and they're having issues with meeting that demand. All segments of the manufacturing economy are impacted by record long raw material lead times, continued shortages of critical materials, rising commodity prices, and difficulties in transporting products. So they're having issues of shortages, prices, and logistics, getting all this stuff out. It is chaos. Global pandemic related issues, worker absenteeism, short-term shutdown due to part shortages, difficulties in filling open positions, and overseas supply chain problems continue to limit manufacturing growth potential. So I just wanted to cover that part right there because they're telling you right now they don't have enough people to fill these roles. People are still shopping. Understand, the government can't print jobs. They can print all the money they want, but they can't print jobs, right? And they can't print the goods and the services. And so you need the market economy to be healthy. And right now it's chaos right now. You remember the little worker ants I was telling you about? When the ants get that distortion, they go crazy. So we getting all of that craziness right now in real time. And there's no end in sight of when this is going to, straighten itself out. So this is what they talking about, the supply chain bottlenecks and everything in there. But let's actually hear from the participants themselves in the survey. All right. So this is what they're saying. All right. Many electronic components and assemblies shortages showing up due to port issues, lack of containers, and other issues. All right, they just don't have it, B. The impacts from Hurricane Ida on the petrochemical industry has put additional stress on an already fragile supply chain. Logistics with intermodal containers and motor carrier containers continues to be a challenge for planning deliveries of materials. So they still dealing with issues from Hurricane Ida, all right? So shipping, you got to understand, we talked about that last week with all those shipping containers out there, they can't even get the stuff off, right? So that's going to be a nightmare. It is a nightmare, all right? In the U.S., labor availability is the most significant supply challenge for our company, with raw materials just behind, okay? They're telling you they're having a labor shortage issue. They don't have people to fill these jobs. And who started this, right? Again, you got to get to causality. When you're identifying phenomena, your observation is you got to dial it back to the causality. And it's the Fed's intervention, all right? The government intervention, government policies, failed policies causing all of this chaos. Lack of labor and escalating costs from every direction are very concerning, all right? Cost, labor. Ocean freight delays, creating disruptions in many areas. Southeast Asia supply continues to be challenged due to COVID-19 outbreaks. So the Rona, all right? That's an easy excuse. Just throw it on the Rona. Delivery and availability of raw materials, primarily carbon steel, are becoming more and more difficult to source. This has resulted in delay in order deliveries. Let's get to this next line. It says traditional in-house machining now has to be outsourced due to a lack of experienced machinists. All right. That's interesting because, I got this guy, that I'm working with. He moved from Chicago down to Florida, and he's a project manager. He's a IT management. And we were talking, and again, I'm talking, I'm on this nerd stuff. We're talking about programming and stuff like that. And, I got a, data science certification, data analyst certs and stuff like that from a couple of years ago. So we're talking about it. And he was like, oh, my gosh. He's like, you got a data science? He's like, we've been looking for people like you. He's like, they just won't show up. And he's like, yeah, man, like we paying $100 an hour and they won't show up. I can't even get nobody to interview. He's like, I don't know who do the interviews. And he's like, yeah, we've been looking for people like you. And I'm like, listen, I'm just a nerd. I mean, there's other people that's definitely probably way more qualified than I am, but I'm pretty sure they're probably going to work for somebody else who's paying them more than $100 an hour. But anyway, this is an interesting thing because you can see right here, they're telling you that they're having issues. They got to outsource this work. And outsourcing could mean what? Like, more than likely ship it to some other country to be able to do it. So those are jobs that will be leaving. Okay. Let's go down here. Supply chain concerns are growing beyond electronics and chips into most other commodities. So now it's beyond chip shortages. All right. It's beyond the chips. I mean, you need commodities to make the chips, right? All the things that's in the chips to, to make it, your copper, your gold, real goods you need for these things, That's why I be telling people with this whole Bitcoin and all that stuff. Listen, you need real commodities to make this whole fake artificial world. Okay. This artificial world can't run without real goods. So you can't neglect the real commodities. The real commodities are always going to be around because people always will need them, always use them. As far as the artificial world, again, that stuff is, it's interesting, and we'll talk about some of that here because I know Cathie Woods, she has some stuff to talk about. So I'll cover some of that with her. But yeah, so they're telling you right now, supply chain concerns are growing beyond electronics and chips into most other commodities. Lead times are extending, shipping lanes are slowing, and we will not see an end to this in 2021. I didn't say it, they said it. All right. We will not see an end to this in 2021. All right. But the Fed says transitory. OK, we used to have 100 applicants. Here they go. We used to have 100 applicants for an opening. That's for one opening, one job opening, and have 100 people to apply for the job. We are now seeing about 10, and often the applicant does not show for the interview. So what used to be 100 people applying for a job has turned into 10 people applying for a job. And most of these people are not even showing up for the interview. Okay. That is just crazy. All right. That's super crazy. And our company's entire supply chain continues to have significant challenges getting manpower. Again, more labor issues here. Let's go down here. Raw material costs still are at record highs, and we have raised customer pricing with additional increases in the near future due to labor costs going up. So you see in labor shortages, but also at the same time, because it's labor shortages, it forces the entrepreneurs to pay more to try to attract. You got to have an incentive to get these people to get to the jobs. Like I was saying, my man was talking about $100 an hour. Well, people not showing up for 100 an hour, and you have to go to 120, and then 150, then 200. And so you get what you call it, the minimum wage to go up without them passing federal law. I think this is all part of the government plan. They want this anyway. They don't want to have to pass a law for it, right? So they're creating all this craziness, and it's costing, all that inflation. But guess what? Entrepreneurs got to pass those costs on, right? Because they got to make a profit. If they don't make a profit, they're going to lose their investors. They're going to go out of business. You see what I'm saying? So anyway, we're seeing it all over. And then they said that huge customer orders are 9 months out due to back orders, seeing this domestically and internationally. So they have so many back orders. That's demand. People want stuff, right? Again, you can't eat Bitcoin. You can't eat, the stock market, right? You can't eat any of these speculative things, right? You need goods and services, right? No matter, you got to have $1 million, but if you ain't got the goods, then what is it going to do you, right? People don't want money. People want what money can buy, the goods and services that money can buy. That's what people want. People don't want money. All right. So just keep that in mind. So anyway, but that's what we got here with the manufacturing PMI data. And it came in super hot again. That the number there was 61.1%. Yeah, 61.1%, growing at a faster rate of change, 16 months trending. And they say that this is transitory. Got to be out of their mind. Right. All right, let's see what else I have. Federal student loan deferment final extension of the student loan payment pause until January 31st, 2022. Now, this was actually September 30. We had it on the calendar here. They were going to end this whole deferment for student loan payments September 30. But as we see, they extended it to January 31st, 2022. See, they got to keep on pushing the stuff back, until they probably going to eventually have to just cancel student loans. There's no way people are going to be able to pay this stuff. Also, the politics, they're going to keep trying to push it back. But say if they don't push it back, you got to understand it's going to have a negative impact on the entire economy and spending in particular, because those student loans come in. That's less money you have to spend. You got to pay that. And then also it's going to impact the housing market and stuff like that. People trying to get into homes. They're going to have to account for all of that into their to their liabilities and stuff like that. So anyway, I think all of that is interesting. Taking a look here at some notes. I heard Cathie Wood in a little interview this past week. And remember, Cathie Wood is a little woo-woo to me, but she is one of our legends and gurus. She's a woman, so we're going to, pay homage to our, women legendary investors, and so, she is a little woo-woo, but she does make some money. So at the end of the day, does it matter if she makes money? I mean, I think she's crazy as hell. But yes, she makes money as well. So it's no problem to listen to her thesis, right? And because that's how somebody always got to take the other side of your bet, right? So she's that person who's taking the other side of conventional wisdom here. But in her thesis, she was talking about deflation. So you guys know we've been talking about inflation, and then there's another camp called the deflationists. They believe prices of everything is going to go down. This is what she's talking about. But these are some of the things that she talked about that are deflationary forces. She said DNA sequencing. Okay. So DNA sequencing, robotics, energy storage, artificial intelligence, and blockchain technology. Okay. And I put a little quote in here that she said, there will be lots of job displacement from artificial intelligence and automation. And that was a quote that she got from some other studies. But anyway, what was interesting is because, again, for y'all don't understand this whole, vax, thrax in your arm, injection type stuff happening, this DNA sequencing stuff, that's what that is. So she believed that technology is going to improve and it's going to have some kind of deflationary impact on the economy. But she's betting on this stuff, which again, she has a lot of hope into these things. She's like one of those hopeful, wishful investors, which makes her woo-woo. You got a good idea. She's going to invest in it. It don't matter if it works or not. She just believes in it like religiously. So she believes in this DNA sequencing stuff. Again, I don't think that DNA sequencing stuff going to go down the way they think it is, unless they shroud it in some kind of secrecy where people don't quite understand, kind of like you say a vaccine. But people don't understand what this does to your RNA and coding and stuff like that to your body. That's why I encourage people, you need to do your research before you get into anything. I'm not telling you pro or not. Just know what the hell you're doing. Understand this stuff. And you can't look at one article and say you did your research. I've been researching this stuff for ever since it broke out. So over a year onto this whole thing. And in fact, when I was in school, we did the Human Genome Project. My man Cannabis, y'all know the rapper, he used to rap about it. He said, you don't even know how to sequence the Human Genome Project. And when he said that, I think me and my mans, we was like, I don't know, we was in the 9th grade or something. It just blew our mind. I was like, what is he talking about? So then we went and did the studies, the whole Human Genome Project. So I've been studying this type of stuff for a while, actually. But anyway, that's one of the things that she claimed is a deflationary force, which is technology, robotics, energy storage, artificial intelligence, and blockchain. So what's interesting is when I did my data science program, you hear about all these things here. We talked about it with the teacher and stuff like that, about artificial intelligence, replacing all kind of stuff. And I told you guys before, this is what I think. And I love technology. Don't get me wrong. Technology is one of those things that can bring prices down if you have competition, right? For instance, I was up in Walmart and they had big 70-inch TVs in there. You know how much those TVs cost right now? When I first bought my TV and I got the Samsung Curve joint, not even 70. I think I got like a 55 or something like that. Those TVs are like $400, okay? $400. Stuff used to cost $2,500 a few years ago. But that's the product of competition and also in the technology world, right? So you remember Warren Buffett, he's never been someone who likes to invest in technology because it's one of those things that you really can't really have an edge on. It's just all about coders, and everybody can get a coder and everybody can code. It's nothing really unique about that. You see what I'm saying? So anybody can come and steal your lunch, right? Anybody can make an electric car. Tesla is an electric car company. Yeah, they're doing great. But look at all those other electric car companies in China. I don't know if y'all seen them, but they're killing Tesla, right? They are smoking Tesla, man. But again, they're not able to compete in the U.S. market yet. But if they were, then they will probably smoke Tesla because they got, better, and they're much cheaper, right? And so that's what competition does. And so with those things, they're talking about jobs being lost from this. And the guy, Andrew Yang, who's running from the Democratic Party, he was key to Silicon Valley. And again, I was studying this stuff, that whole paycheck thing that he was talking about, paying people $1,000 or $2,000 a month or whatever. That's not an idea he came up with. That was something that was already circulating in the IT world, which I studied about that too. But that's always been a narrative, throughout history, is that technology is going to be disrupting jobs. As we see, technology actually improve jobs. Most jobs that get replaced from technology are repetitive jobs. So yeah, you're likely to see those things go away, but then technology also ended up creating jobs. So it's going to be interesting to see how this plays out. And when we listen to these employers, these companies saying they can't find people, they can't find people to get these jobs, or they can't find qualified people to get these jobs. Well, some of their criteria is what's preventing people from getting those jobs. You got to think, right? You got to have a PhD or a master's degree or bachelor's degree, all these degrees that you got to have to be able to get these jobs. And it's not even necessary for you to have a degree to get these jobs. Every job is going to train you on the tasks that you're going to need to do anyway. Now, you need to have some type of intelligence. We're going to hire low intelligent people, right? You want to have good functions and stuff like that. But a lot of those things are just unnecessary. But, again, this is how they were able to give value to degrees and stuff like that. And this is part of the reason why we have so many people that's so in debt by these student loans, they probably never be able to pay them off. That's why I say they probably have to get rid of this stuff anyway. So they created a whole Ponzi scheme basically to enrich, these education facilities, and the government, backing it all. So anyhow, but we'll see how all this stuff plays out. I just think that people are too optimistic about technology, because of Hollywood. Like, we all grew up watching all these space movies and all this other stuff. So we have these nice, grandiose ideas about it. But then you looking at like reality, the stuff don't work the way you thought it. Like, remember, we're supposed to have flying cars by like the year 2000. All right. I mean, Tesla's not even close to a flying car, right? So you see what I'm saying? Like we had these crazy ideas with technology and stuff, and I think people get too crazy with it. And then the fact they're trying to move in this green energy stuff through Congress and politics. And I have no problem with green energy if it naturally comes along, that it's a viable, source of energy. Companies are able to use it. They're able to get the cost low enough. People are able to use it. The climate change hoax, again, this stuff is crazy. One of my data analyst projects, we ran the data on temperatures all over the world. What we found was that there are certain times where climate is hotter than normal times, and there are certain times when climate is colder than normal times. It all averages out to just a net nothing, right? So again, they push narratives to get people behind this type of stuff. But if you look at what's happening right now in the UK with energy, right? And we just saw like those energy prices, going crazy sky high, but they're having a energy shortage, right? So this is going to be a cold winter, okay? I am not optimistic on this, not at all, from what we're seeing. Even China has to, reckon with this, energy crisis. So we have an energy crisis overseas right now, and people don't understand this stuff. But you got to understand what it takes to make energy. You got to have real commodities like coal, right? And they talking green, this, that, and the third. They said those wind turbines, okay, they can't produce enough energy. They're not able to. They didn't have enough wind, okay? They have enough wind, so you still need these things. And again, the creator put coal and all these things called energy, as they say, energy neither created or destroyed. Well, I believe that the creator put the energy on the earth for humans to use, because energy serves no purpose. It doesn't do anything unless humans willed it into something useful. So it's there for us to use. And if we have coal, then we should use it. Now, can we make it clean? That's what they're working on, right? And it's much cheaper than all the rest. is more accessible. So anyway, but with them trying to shut that whole thing down and try to go through all this green stuff, it is chaos. They are tripping. Anyway, that's Cathie Woods. She's a little woo-woo. But, I still like to hear all the different, theses out there. Ray Dalio, he's in the Legends and Gurus group as well. Here's a nice little video that I posted on here that you guys can check out. And you see Topaz commented in here. She said, well, cash is trash. For those who've been following Ray Dalio, he's also in the Legends and Gurus group right here on the website. So we got all his theses and stuff like that. I got a couple of his books and I posted that stuff in there for you guys to check out. He's been pretty much on the same track. And again, he's taken the time to have his team at Bridgewater. Then they went back and they traded. They went back over 500 years. Think about this, okay? 500 years. He got all his geniuses that works at his hedge fund. He got the largest hedge fund company in the world. So he got the money and the time to do this when we don't. Anyway, they recreated this whole world back in the past, and he went inside this whole simulated world and he traded throughout the times, over 500 years trading live. All they did was feed him information and he had to navigate through it. I would love to be able to do an exercise like that. In fact, we used to actually do it here in our little trading simulation. I forgot what it was called. Geez, Louise, we got them on YouTube. But anyway, we used to have the game night here. And when we can do that, they disguise all the tickers and disguise all the different things when you have to trade. But it's interesting to see that he did that. And basically, he's been writing about what he learned from trading in those environments. And year over year, stuff over, things happen in cycles, basically. Now, mind you, the business cycles, the Austrians, discovered the business cycle. Ludwig von Mises, and Hayek, they actually discovered the business cycle and stuff like that. But I still like Dalio's insight because of what he's seen. He's very well documented. And I don't have the books up here to show you guys, but I think it's called, I can't even remember the name of it, Big Debt Crisis. Yeah, Big Debt Crisis. That's the work. It's like 3 books together and you got all the charts and all that stuff in there. And, basically, what he talked about, and again, you guys can check it out. Some of those things are right here in Legends of Gurus. Just find his name and you'll see it. But he talked about how societies over time, they always do the same thing. They go from hard money, then they go to paper money, and then they destroy their economies and they got to start back at gold. They always go back to gold. And that's why he is a big investor on gold. Now he has bought some Bitcoin. And the reason why he's bought some Bitcoin, because bonds and cash is just trash. I mean, this is why we see in the stock market continue to go higher when it should have corrected a long time ago, but there's nowhere for investors to go. So you're forced to take on some kind of risk. So he got a very small amount of risk in Bitcoin, which again, he's just speculating. But at the end of the day, like you said, in this video and all other videos, the government is going to outlaw Bitcoin. I mean, because they will not compete with it. We've seen time over time. It is a must that central planners control their money. Think about it. They can't control Bitcoin. So if they need to get stimulus out, if they need to, get print welfare checks and all this other stuff, they wouldn't be able to do it through Bitcoin. See, Bitcoin is an impediment. And this is another reason why they got us off the gold standard, because gold prevented them from being able to do that. Gold was a regulator. That's why we need to go back to a gold standard. And Bitcoin is just a Trojan horse for them to be able to roll out a digital dollar. And in fact, they're working on that dollar with MIT right now to get people off of physical money, to get you in the mindset like China. And China, you can't buy nothing with cash over there. You got to have an app, WeChat and all this other stuff. And you just walk in places. You don't even pull money out. You walk in and walk out. They got facial recognition, all this technology stuff they talking about. They sell you on this technology. But listen, you are in surveillance state. You have no freedom. They track everything you do, and it allows them to be able to control you. So they got the digital yuan over there, and they get into the system by like saying, "Oh, we have lottery. We giving out this money. This is how to get into the system. And when you get it, you're gonna spend it into existence, right?" And so this is the government scheme, and China's always ahead of us. So America's gonna soon follow the same steps. And if you think it's not gonna happen, take a look at the shit show we have right now with Biden and them. What do you think they're doing? What do you think the whole vax mandates and stuff is all about, right? It's a social credit score system that they already have in China, and they're trying to roll it out here. So you better fight against this stuff. I'm telling you right now, your kids are not going to be as free as we were. But anyway, check Ray Dalio out in that. Terry Bless was with an article that says semiconductor chip shortage could extend through 2022. Marvell CEO says we kind of covered some of that in the PMI numbers about those chip shortages there. And then Tesla delivered 241,300 vehicles in the third quarter, topping expectations. And so, okay, Tesla there. Anyway, we got earnings really light here. Topaz blessed us with the earnings report. Who we got on the radar? Really nothing. It's going to be nothing pushing the markets as far as earnings go. We got Monday after the close, Duckhorn and Comtech. Nobody's really checking for them. Tuesday before the bell, we have Pepsi. That'd be interesting. And after the close, Saratoga. The rest of these, let's see, Acuity Brands on Wednesday, and we got Levi's and RGP. Thursday, we got Tilray for the weed heads. I'm the weed man. Y'all know about that Bone Thugs and Harmony. And then Friday, Burner. So it's going to be really light on earnings. Yeah, that's right. Topaz Minority Report stuff. So that's going to be really light with earnings this week. Topaz also blessed you guys with some IPOs. So that's those people that's interested in IPOs. It's a nice list that she dropped in here for you guys to check out. Click on that, check it out. All right, California eviction moratorium ends, leaving tenants facing tsunami of evictions. All right, so again, this is all interesting because of the eviction moratoriums ending. That means people got to go. And they've been trying to, push this thing back over and over and over again. So it's going to be interesting to see how this plays out. Prayers for those people that's facing eviction. On the other side of that equation, there are people that's out there trying to buy homes and haven't been able to buy homes because of the shortage of the homes that's in the market. And so once people are able to get evicted, that brings supply back into the market. That should bring, prices down. But because there's such a shortage and demand is so high, prices are out of this world. You guys know Cali is it's always been out of this world anyway. And in the housing market, just regular people trying to buy, they've been priced out of the market, which is crazy because we have, companies like Zillow who's buying up all these homes, and they are running models on this, this business model that they have to buy these homes and flip them kind of situation, which is speculative, which I believe is a speculative bubble that's going to be fueled. And this is the interesting thing about these regulations, man. Like, you guys got to understand, you need the markets to be free. You need to be free, okay? Just trust and believe me. You guys don't understand. So when all the speculative bubble, you guys already see what's happening with, Evergrande, right? We see Evergrande blowing up. And now you see what the government intervenes and incentivize these companies to do fugazi craziness, right? They get around real slippery slopes to make things happen. And then, so they buying up all these homes. Now, mind you, they're not buying at a discount, right? So the whole key for anything that you buy, it don't matter if you buying at work, you buying a house, you buying a car, your key is to buy low, sell high, like we do with stocks. Zillow ain't buying low and selling high. Zillow buying at highs, all right? They buying 100,000s over the bid. And that's why, regular people trying to buy, they're not able to buy, because who in their right mind is going to pay over 100,000 over the bid? Only a few people, right? That's if like you're from, New York and you're moving down to Texas and your cost of living is totally different. You got a New York salary. Yeah, you may pay the extra 100,000 over the bid, but it's not going to be like local people doing that, right? It's outside people or these big companies. And so anyway, as they're fueling this bubble here, and, when this thing crashes and blows up, I'm thinking that maybe they believe the government is going to bail them out for some odd reason, because it just doesn't make any sense to me. And the first thing that's going to happen when this thing blows up is that they're going to, the Democrats and the politicians, whoever, they're going to be begging for more regulations. And say, we need to stop that from happening. We need more regulations to stop this, that, and the third. And all they're going to do is mess up the industry, prevent people from being able to participate in that industry. Like what they do with licensing and stuff like that is just ridiculous. It's going to cost regulation. There's in the movies, films, and documentaries group, there is a film in here, you guys. And again, I got the links to the documentaries and films in there. You can just click it and check them out. But there's one called Atlas Shrugged, okay? And it's by Ayn Rand. She wrote it. and it's a really, really great book. But they made like a modern kind of movie based off it. And I think she wrote this back in like the 50s. So anyway, it's called Atlas Shrugged. It's 3-part series. Check it out. And I told you guys about it before. Now I'm gonna go ahead and spill the beans on you. It is not like the greatest film ever. Okay. The thing that I don't like is that they change actors every movie, but it's still the same characters. I hate that, they change actors every, series, whatever, but it's the same characters and same story. So, but that's the thing that I hate about it. But anyway, it's taking like a movie that was a book that was made way back then and modernizing it. And I think they did it around like 2012, 2013. But it's teaching you about economics. It teaches you guys how the markets function and how government disrupt that natural function and what's the logical conclusion. So definitely check that out. I'll definitely encourage you guys to check that out and to show you basically how it goes down. Then you'll start to understand when I'm talking these things, it'll make perfect sense to you. So make sure you check it out. But anyway, that's all that's going to happen. They're going to blame the markets and blah, 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 but really it's the government's intervention, the Fed's lowering interest rates and things like that, that's causing investors to move the way that they are moving here. And talking about the crypto thing, here you go, Topaz posted this article here that says Treasury official crypto needs adults in the room, should embrace regulation before crisis hits. What good is a crypto if it's going to be regulated? You guys this is so stupid, right? Because the whole purpose of the crypto is to get away from central planners. Right. And that's the idea that I actually like about crypto. It's like, OK, there's an alternative situation where you can alternative tool that you could use to get out of the system. Right. But if it's going to be regulated, then what good is it? Right. If Coinbase and all these other companies that's got your crypto have to report to the government, I mean, you might as well use government currency and everything else because you just defeated the whole purpose. Right. Now, if you want to speculate, thinking you can make some money, I can understand that. But it ain't no diamond hands holding and all that other stuff. Because again, once this stuff, if it ever becomes a threat, it will be crushed. Right now, get your money though, right? So I think all of that's interesting. The job claims, weekly jobless claims total 362,000, above the 335,000 estimate. This is again more weakness that we're seeing in the markets. We're seeing the jobless claims go up, right? So more people claiming unemployment. And now remind you, they thought that once they remove the extended unemployment benefits, that this was going to force people to come back out and start working. We can see from all the PMI numbers. And again, PMI is a leading indicator. It's giving you insight into the future. We don't need a crystal ball, right? But we're seeing what's going to take place in the future with the PMI numbers, right? And then you can see the jobless claims, they're going up. It's the wrong direction, right? You need for those things to go down. So all of these are signs that the economy is weakening and all this inflation. So you have inflation. Now, what's supposed to happen with inflation is that the economy is supposed to go up with it, right? But when you have inflation going up and then the growth is going down, that's what they call stagflation, right? So it's stagnating. And again, this is a really, really bad combination because basically what it's saying, and check out Ray Dalio's work, who covered this stuff extensively years before this whole thing even came down, that this is how you go into depressions. All right. So you understand what's the difference between a recession and a depression? Well, the recession bounces back. OK, normally like 6 months to 2 years time frame, take the bounce back, what have you. But a depression is basically where government intervention can't revive the economy, like the 1930s or FDR, right, who served 4 terms. And they called this guy a dictator, right? And I know that the Democrats call him the greatest president ever. But he served 12 years. He died prematurely in his 4th term. But in that economy, they did not grow. They had bread lines. It was crazy, right? You went into a depression. So all the government intervention didn't fix anything. It made things worse, right? So it makes things worse when the government, all they can do is print money. That's their only solution is to print money, right? And so Powell talking about, they got tools to solve for inflation. Powell ain't doing nothing. All right. Powell. So if the rates go up, will be not a product of Powell, but it'd be the market forcing the rates to go up. And we're seeing those rates go up right now. Let me actually pull up those rates real quick. OK, here go the yields now. And this is another reason you see the markets again. Okay, yields go up. All right, those yields going up. That is not good. Okay, we're looking at 10-year. This is the risk-free rate. You guys can see we ended on first at 1.48. We actually made it all the way up to 1.55 and then came down. But you guys can see those yields going up. Okay, so the cost to borrow money, okay, those people that's trying to get credit cards and homes, mortgages, and all this other stuff, okay, this is the cost of that money is going up, okay? And when this happens, it prices people out of the market again, okay, because it makes things more riskier. So as this actually goes up even more, I think it's going to be problematic, okay? So I think it's really going to be problematic. So check that out. Senator Warren calls Fed Chair Powell a dangerous man, says she will oppose his renomination. So you guys know Powell, he's up for renomination. And you got to remember, you know, he was Trump's guy, you know, the Republican, you know, although him and Trump went at it, you know, they were beefing, right? And the reason why they were beefing is because, you know, of the dynamics of the inflation here. Let me actually just take this and show you guys. If you remember, let's just go back about 20 years. All right. So if you remember on this chart here, I'm just going 20 years on it. So you remember I was showing you guys when I was teaching you all about the yield curve and stuff like that, right? The gray line is what the Feds control. Say the blue line is the free markets, right? So the Fed suppressed those interest rates. So I just took it back 20 years here. We can go back further. But you see, a recession follows every time this happens. The yield curve inverts, right? This is how I wrote that article. This is how we were able to predict this recession as well, because the yields inverted. And so this is the Obama years. Feds cut the rates all the way down to zero, okay? And as soon as Trump got into office, his man Powell started raising those rates up, all right? And so this makes the cost of borrowing money, more expensive. This is the Fed's weapon. This is their tool to cool off a hot economy, is they have to raise the rates, okay? They raise rates, all right? And so if I was to go back even further, you guys can see how long it took for them to actually do this. Let's go back 30 years. All right, so normally it takes them, when they lower those interest rates, okay, it's normally about 2 years, okay? If you take a look at any other time in the past history, it takes them about 2 years to lower interest rates before the economy can recover, right? So this is the whole thing with those recessions. That's why I said about 6 months to 2 years or what have you, because that's what the Feds are doing. They lower the interest rate. This encourages people to take on debt, encourages business to invest, take out more debt, and then you get the growth, okay? And then when they raise it, it is to cool off a heating economy. It's cool off a heating economy. But you see under Obama years, I know a lot of people like to give Obama the credit, but really it was the Feds, okay? This was what helped the economy to kind of bounce back. It never quite fully recovered though, but because they had to suppress interest rates for all of this time, longer than any other time in history. And it created the wealth gap. And I wrote about this so you guys understand. It created this whole wealth gap where you have so many people that's in poverty, but you have people that's ultra rich, because all of this does is it inflates assets. And if you don't have assets, then you didn't participate in this. But when Trump came in, Powell flipped the switch on him and started raising those rates. And Trump was cussing his ass out, threatening to fire him and everything. It was beefing. And so then, the recession hit, they had to, drop those rates. Trump was out of office now. Powell is still in. And now we're at the zero rates again. And so the question is Biden going to keep Powell? Because, the president, they appoint these guys, right? And so Yellen, she didn't give her a recommendation to keep Powell. But now there's a lot of fugaziness happening with these federal Fed chair members that are Federal Reserve members of these banks. They were trading during this whole time with the Feds, lowering rates and doing all this other stuff. And these guys are trading, making bukus of money. And like every week is a new story. I don't think I got any stories posted this week, but yeah, there's other, Fed presidents that's coming out and they're revealing what they were doing. We had two of them that stepped down. Was it last week or 2 weeks ago that just stepped down because of their trading activity? Now, one of them talking about it was because of his health. Now, on the same day they announced that they're stepping down. Now, I don't know what episode this came out on, Billions, Topaz. I don't know which episode this came out on, but this is real life, right? So you get two Fed presidents that are saying that they're stepping down on the same day. One was in the afternoon, the other one's at night. And this guy had a nerve saying he's stepping down because of his health. Both of them got caught for doing the same thing. So anyway, I think it's gonna be interesting. Again, you got, Elizabeth Warren, she's sick of Powell. She's like, I'm sick of him. We got to get somebody else. And they're going to want somebody who's going to be more hawkish than not hawkish, but dovish, more dovish than Powell. And so it's going to be interesting to see if Powell keeps his position. I mean, I think he's going to keep his position, but I don't know because the economy is rolling over right now. And, look like we're going to double dip into another recession. And if that happens, they just might get rid of Powell, But if I was Powell, I wouldn't even want to be in that position. No way. I'd be ready to step down. I'm like, y'all done stressed me out enough. You had to deal with Trump cussing them out, threatening them. Now you got to deal with this. Yeah, I'll be ready to go ahead and just deuces, B. I'm retiring. I mean, he already rich, so it ain't like you need no more money. You know what I'm saying? Yeah, so, all right, last one. $80 oil is sending the market toward demand destruction. All right, so they're claiming that because oil is higher, it's going to, curb the demand. I don't know. I think we're going to have to see, how that plays out because, that's not going to stop nobody from going nowhere. And, people still got to go do what they're going to do. They're just going to eat the costs, right? So you're going to be more poor as a result. And then exclusive, JP Morgan's Dimon, which is Jamie Dimon, he cautions a U.S. default would be potentially catastrophic. All right. So this all talks about this whole, U.S. defaulting, which is something that can likely happen this month in October. So this could be a Halloween before Halloween if this happens. And the Republicans and the Democrats, they're beefing. We're at a highly polarized, situation right now, just crazy. I don't know if we'll be able to reconcile all of this, this craziness that we have right now. Now, I wouldn't be surprised if we were to break out into some type of civil war or if we were to secede, like split the country. Like we're like on the brink of all of that. It's not going to happen overnight, but this stuff is likely to happen. But anyway, with this whole situation with the Dems and the Republicans, with this whole debt situation, the Republicans are going to hold us off. You feel me? They're going to make the Dems feel the pain. And the whole question is, do we go through default? That's going to be catastrophic. All right. So, we'll keep our eyes and ears open to all of that because that's what's happening in the markets here. So with that being said, let's take a look here. All right. So I got my side-by-sides here today. And I got the ES on the left. Let me switch over to the yellows. All right. So I got the S&P 500 over on the left. And then what I want to take a look at is, let's look at the dollar here. All right. Take a look at this, right? So I like to use my side-by-side so that I can see, if we have any, any divergence or convergences here. And if you guys can see this little yellow line as I move my cursor, you can see it. So as I move over, you can see on the left side, the S&P 500 is going down. But on the right side over here, as the S&P 500 goes down, the dollar is going up. So what does this mean, right? This means that when we have a strong dollar, we have weak equities, all right? So I like to look at that side by side because as that dollar strengthens, then that is not good news for the stock market. All right. And it goes vice versa. As the dollar weaken, all right. And again, we can see the dollar hit this level, 94.5 exact, and it's starting to recline off of that. Right. And we can see over here, we're in an overbought territory. And so perhaps this will come down some. Okay. And then we can see the equities start to come up some. Okay. So coming into this week, I think that's what we're going to have to watch for here is how these are going to play off. All right. what does the dollar continue to strengthen, or does it weaken? All right. And I know I'm on the side by side. I don't want to change it right now. So let me actually go to a weekly chart on this one here so you can see what I see. Okay, you saw that double bottom. That was a bullish setup for the dollar here. Bingo. Double bottom. That was bullish. Okay, and here we are right up here. Now I got the 200 moving average that's slightly above. It's actually like 95 bucks, right? So that's that level here. We're actually on this level, which is slightly below it. That is a good level. The question is, which one of these levels do we actually get that real resistance? Okay, because again, it's so close to that 95 zone. You know, it wouldn't be too far-fetched to believe that that can't go further, you know, up there. Although looking like it's starting to recline a little bit, but that's what I'll be watching for to see if we get any more strength on that dollar. That's going to mean more pain to equities. And then we saw equities came down to this zone right here. Okay. And then snap right here as well. We saw it touch that same level. That's how we know that fib level is true. It caused a nice rip down here that shook out the weak money. That was a huge rip, and then we can see it close up higher there. Well, that's where it's actually trading at now. So it looks like it's trying to come up now. I will see how it behaves up against that mean. Does it, continue to come down, or does it start to kind of hold this level up here, that 100 moving average? So that's what we're going to be looking at coming into this week. And let's see, while I also have that dollar up, we're going to also show you guys gold. All right, because again, the same kind of scenario, we see gold going down, dollar going up. Again, that's a good situation that you can kind of see playing off of each other, which I think that's interesting there. I think that gold is going to try to come up here. We can see it was oversold, and they're we can see the momentum starting to come back in. I don't think we get a strong move though. So again, this, short-lived rally, we'll see if we can come up into, the moving averages that we got up here. Maybe perhaps to the 100, maybe even the 200, right? Because we can see got chopped off right there, got chopped off right there, got chopped off right there. So we know that 200 is true, that, the price is going to try to get up there again. So, that could be this wave that we got here. We can see the momentum is changing from red to yellow. You can see right there shifting. Every time it makes that shift, we have a nice little, boom, boom. So kind of expecting that on that. All right. And so with gold there, let's take a look at Bitcoin, because we saw Bitcoin doing its thing, getting busy. All right, and this is a weekly chart. Let's go back to the daily. All right, bingo. So Bitcoin is looking like it's ready to make another run up. All right, let me spread it out a little bit. So for the crypto enthusiasts, it's looking positive for Bitcoin. We saw this 200 moving average right here, floor, is true. Excuse me. We see that that's true. I did a swing from this high to this low, and we got a 618 that's right here. And we see that Bitcoin is trying to overcome this resistance level. We do have a buy trigger right on that level, but it's still too early to know if it's going to clear this resistance right now. Typically when we get that buy arrow, we get a nice run up. Doesn't mean it's going to be true every single time, because it's up against a key resistance level, which is the 618. And we can see right now that it's kind of trying to chop there a little bit. But if we get any more weakness here, I believe that, on the equity side, that Bitcoin could overcome this. So we'll have to see. But I think that's interesting. All right. Let me know what you guys think about that. Taking a look at the Russell. This was interesting because it's been chopping sideways for a very long time. Like this whole year, the Russell has been shoot. Okay. And this has been, the perfect iron condor strategy. You'd have made money every month just throwing an iron condor on the IWM or the rut, and that sideways action, you better close out. Slow money, but it's money. All right. But what's interesting is that you see all of the moving averages are right at that point where a decision has to be made now. All right. We can see they were very wide before. All right. We see these lines here. That's the 20, that's the 50, that's the 100, and then the 200. They had a little space between each other. They had some air to breathe. All right. Now they're all cramped up and they are right here at that point where a decision has to be made. We got a buy trigger that's right here, but that doesn't mean that it's going to go long. Okay. But we're at a point where this thing is going to have to make a decision, either higher or lower. And then based off of what this does, the broader market, I believe, is also going to follow. So I think that's likely to happen this week. Again, this is a daily chart, so something has to happen this week. We had to get a decision on this thing here where I think we're going to start to make a move either lower or higher. One way or another, I think we're going to find out this week in the small caps, the Russell. All right. Ooh, we're right here at time. All right, and then here's the NASDAQ. As you see, moves just like the S&P 500. The big boys are in here. Got smacked down pretty nicely. Look up right there up to that 100 moving average. You guys can see that 100 right there. And that floor is holding. Then you get a flood of dip buyers. They try to come in and try to hold this thing. Okay. It could be a trap though, so you got to be careful. But we can see that the price is trying to hold this level here. Again, it's still beneath the mean. So again, this is bearish territory here. So I wouldn't get too enthusiastic about it, but I do expect to see some supply demand dynamics here, that this thing will kind of chop a little sideways up in here. Okay. So again, that's kind of what I'm expecting on the NASDAQ there. All right. And with that being said, we covered all of the indices here for you guys. Let's take a look at a couple of names from you guys. I know we're right here at the time, so we got to bring it to a close. But any stocks that you guys are taking a look at right now? All right, just switching that chart over. All right, so we got the Dollar Tree. Let's see. All right. All right, so the Dollar Tree, let me just clear some of this off a little bit. All right, so just cleaning the chart up just a tad bit here for you guys. On the Dollar Tree, this is what we see. We saw it reversed, okay? It ran out of, sellers. We could see that. It capitulated, the buyers pushed it back up to the 100 moving average. This resistance zone level here, that's 100 moving average. You guys can see that right there. That's what price is at right now. Typically, when we see a pattern that looks like this, it starts to try to form a pattern, right? So you'll get some choppiness right up in this zone here. You get some ups and downs till a pattern can be visualized, be like a flag or a pennant. So you can be able to connect that, something like that, before it makes its decision if it's going to go higher or lower. I know that, I guess the news on the Dollar Tree is that they're going up on their prices from, dollar stores to $2 stores. That's going to be interesting to see. And typically these companies will do well in recessionary environments because, people losing money and stuff. They no longer shop at high retail. They'll go to dollar store and spend cheaply. I don't have a dollar store that's near me, so Dollar Tree store. So a little interesting to see how that plays out. But you said that they're already going up in VA. Buy back stock as well. Yeah, it's okay. So they're buying back stocks. Yeah, that's going to be interesting. The key thing here is that it's up against a major resistance level, which is this 100 moving average. And if you didn't have this on your chart, you would never know that it exists. But you can see how price is reacting to the 100 moving average. And again, we can see that here, even on the stochastics right there. I got a little sell trigger on here. So again, I probably expect for this to chop sideways a little bit till it forms another pattern. However, if it does breach that level, then you got the 200 to look for. So this 200 is definitely true. It's got chopped up again on that 200 before, and that's the next level up here. So if it does go even higher, it'd be there. But I was expecting it to be a little choppy this week. That's what I expect on that one. And he said, "This is the one you want." Is that Daco Energy? Yeah, so this one right here doesn't really have much of a defined pattern here, but we can see that price is trading under the moving averages here. It's trading under moving averages. You got to kind of take a bearish outlook. But if we see that is like we see right here, that is doing a counter trend movement here. A counter trend is kind of like we see back here. All right, it's under, it moved up into resistance. So you take a look at what's the key resistance here. If it's going to do, like it did here and it did there, because it's starting to bounce. All right, we can see it bouncing again. And what zone are you looking for this to go trade up into? It's that 57.91, that 62.45. It's a few bucks in there. If that's worth a trade for you, you can definitely eye this level right here as the key resistance zone right there. But again, it's got to clear through this 21 moving average that's right above it as well, which, again, that's a likely scenario for the energy group. Again, energy stocks, they're up. So, this is up along with that. So you can take a look at some of those individual names in energy as well and see if you can find some the more strength in the energy sector. All right. And then Tesla. Yeah, Tesla, again, another interesting scenario. We talked about Tesla before. And you have, what's my man's name? I saw Chamath Palihapitiya sold his Tesla stocks. I think Cathie Woods sold her Tesla stocks as well. Since they're not pumping Tesla, it's going to be real interesting to see if Tesla moves higher. Although, it can. But see, it already hit that 800 zone, right? It already hit this 800 level before. It's coming down. Now, I wouldn't be the one to short this. Still bullish, okay? Still in the bullish trend. We can see it's still in the bullish trend. But it is overbought at the same time, okay? The trend is still north, so I wouldn't be the one to short it. So it could go north, but it's one of those things that Tesla is highly speculative right now. It moves like the freaking AMC stocks and stuff like that. It's like a meme stock. So maybe Elon Musk comes out and tweets something really, to excite the markets, and, Tesla will pop up. I know he's begging that the regulators to not, outlaw Bitcoin or what have you. But he's been kind of quiet lately. I haven't really noticed much come out of Elon. Maybe they shut him up finally. But yeah, when he get to talking, he can make something move, or he can kill some stuff, man. So yeah. Again, I don't know. I think a lot of people are really optimistic about Tesla. I'm not as optimistic about Tesla because, again, it's technology. Anybody can code. Anybody can do what they're doing, and although they may have the best positioning right now because they do a lot more than just Tesla as well. But, it makes it tough. So they got to get those prices down on those cars for one. And this whole energy situation, it's got to come together. So, but that's just my thoughts. Again, I haven't really studied on the Tesla situation that well. So, but yeah, but you guys know, we'll check it out like live in the chat room. We see some movement. We'll be able to see where the flow is at, right? So we're watching the flow throughout the week, where the flow is at. Their setups, we'll take the setups. So we definitely want to see where the flow is at. But again, big boy Chamath and Cathie Woods sold their positions. So be interesting to see if, other people start to sell their positions as well. But yeah. All right, gang. So we've reached our time here. Definitely appreciate you guys this week, man. Again, we'll hop up in the chat room this week. Make sure y'all check us out at Wallstreet.Jackboyz.com on the website. Get your registration pop off, and we'll catch you guys in the chat room. Have a good night. Peace.